Hello, everyone. I hope that you had a wonderful week so far. Today, we will be introducing a few things, which, you know, will be basically me building on the things that you already know. For the rest of this month, I will, be trying to just strengthen the models that you already have and give you tips and, how to anticipate, market moves, price reactions better. So, as you guys know, right, and this should come as no surprise, Monday and Tuesday, and, more specifically, for the index futures trade, we expected the high, of the week to be forming around that time, right? Monday and Tuesday, right? And if you guys remember, I didn't say just Monday or just Tuesday, and this is due to the fact that you know that for a reversal to occur, we must have a cracking correlation, sequential S&T, preferably as it is, more, visible to the eye. And, that's what we got, right? And we'll be diving into that, along with, other things, other synchronizations of, the different types of correlations that you can have and how they affect one another. So today is Wednesday, right? And, we had no news events today, right? Which is why we had, price continue the direction which was set into place by the sequential S&T, which occurred, between Monday and Tuesday. Tomorrow is Thursday, right? So we can expect, volatility during the New York session. Something that we talked about, prior to the beginning of the week. The plan is the same. It never changes, right? So here you can see, and this is, a very interesting, lesson, because usually, right, in high probability conditions, right, you will have the euro, the Great British Pound, and the index futures chart, moving in the same direction. That's what you'll usually have. But here, right, and you'll see this, whenever I switch to the other slides or windows, whatever you prefer to call them, that, that's the case. We had the US dollar falling today, and then we had the NASDAQ falling as well. Then we also had the S&P falling as well. And then, today we will not be focusing on the Dow, which is something that we have not been doing for the, for the past few weeks, I believe maybe a month or so. So here this is what we, actually wanted to see, which is we wanted to see price fall lower below this low right here, right? And I gave the specific parameters that we'll be looking for in the previous video, right? Which would be around here, the length of this wick, right? And if this wick wasn't here, it would be the length of this one, right? Which would still land you around here. This level right here, which is approximately, and if we would go to the big figure number, right, it will be 103, right? 103,000, right? For the US dollar index. So this level would only become important to us if we had some form of cracking correlation occur at that level, right? And here, right, we expected the Euro USD to, push higher. And I know it's not the cleanest price action, it's not, but it's what we have, right? We can force the market to do something that we want it to do. So we had the euro push above this high, which is what we expected. And in turn, you're going to expect the Great British Pound to, follow through with whatever expected the euro to do. Why? Because they are, they mirror one another, right? They move in the same directions most of the times. So, with that being said, we had a few things happen, Trump being quote unquote shot, which is, I believe I brought up the last time. Right. And it still amazes me. Right. But, you can see that, the economic fabric of the world is, getting stiff, right? As if it's about to rip. Right. And I believe that the after effect of the volatility, which will be brought on by the US elections this November, I believe it's November 10, right? So yeah, this November, right, which, this year is Q2 of the quadrennial cycle. And the quadrennial cycle is comprised of 4 years, right? So I believe that, we are going to expect, some dramatic, right? And I got to put emphasis on that for you to understand. Some dramatic, and you haven't heard me like this for like 2 months, right? Being this, emphasizing on price moves. So I'm expecting some dramatic change in price action, right? We have, as one of my colleagues on Twitter, what's his name again? MX7, I believe. Yeah, he tweeted something I liked that I commented on as well, right? Where he said that the US dollar has been consolidating for 2 years, which is something that we have talked about before as well, right? It's been consolidating for 2 years, literally, right? And whenever you see this type of price action happen, and just because it's been consolidated for 2 years, it's not that, it's the end of the algorithm, price will not be, moving as how it used to anymore. No, that's false, right? Price is fractal. Or reason why this is happening is because we have U.S. elections, right? This is something that will happen the next time we have U.S. elections as well. U.S. elections usually put the market right into, a total different phase from the one that is coming from, the one that's prior to it. And when I say it, I'm talking about time, right? It's not the U.S. elections that matters, the time, right? They just make the U.S. election at that specific time because, that's a, time that the market moves dramatically, right? It always happens, right? There's always a lot of distractions before, and none of that is random, right? And just remember what we're talking about now. When it happens, you'll see, right? It's not random. And the next time, 4 years from now, we're going to see it again, right? When the next U.S. elections occur, right? So there's a lot of drama. There's a lot of, wars, rumors of wars, stuff like that occurring, right? And this is just a, foreshadowing of the volatility that is to come. And it will be good for us and very good for you because, a lot of you have been doing well, you're passing your challenges and all of that stuff. And you think that's, the good part. But no, the good part is that, there are times when you know what price is going to do. That's the main thing. And, coming, you will have, in my opinion, what I think we will have, a tremendous downtrend of, the stock market, the crypto market, right after, and, we'll talk about what I expect the, Bitcoin, the S&P 500, et cetera, to do, right? But yeah, in the, coming years, like literally, I believe that we will have, a cycle, which, well, the rest of the cycle, because now I'm expecting manipulation, right, of the US dollar, which will put everything into place, right? I'm expecting stocks to fall, for some time. And I'm expecting the second year that it's falling to be worse than the first. So the first will just be a foreshadowing of, what I expect to happen. I think I've been rambling too long about that, but yeah, that's something, to take note of, to put on your wall, as a opportunity, something, to come. And, the market conditions that you've been working in, for the year, it probably seem, pretty easy for some of you. It's not easy at all for, for especially, people that are new. This is the time where, everyone's quitting because fair value gaps are not working. Order blocks are not working. Breakers are not working. Nothing's working except, what we talk about here. That's working. But none of those concepts are not working, which is, just seems weird to me, right? It's like insane. But anyways, here you can see that this is the thing, right? One of the main things, right? Which I talked about in the previous stream, which is the precision swing point. So the daily precision swing points, right, couldn't be matched to the daily cycle, right? And with that being said, it's not saying that the precision swing points by itself mean, everything. But whenever you have, a daily cycle sequential SMT within a daily precision swing point, right, the next day will expand, as you see happening here. So now I want you to focus on the S&P 500 and the NASDAQ, right? So here you can see that we have a, daily precision swing point here in the S&P 500. Then we have a precision candle right here, which is a, another cooking correlation in the NASDAQ, right? Which, was, this was the high of the week for the S&P 500. And, this was, the highest close of the week for the NASDAQ, which is something else, which we will discuss later. So within this candle, we have, a tremendous amount of cracking correlation. So within this candle right here, the formation of this precision swing point, right, it took place due to the fact that we had, the daily cycle sequential SMT within it. So again, let's say that again. This is something that I need you to understand. Within this daily precision swing point, this candle right here, we have the daily cycle. Within the daily cycle sequential SMT, right? Which is, sequential SMT, in regards to the 15-minute time frame within this daily precision swing point. Within a weekly precision swing point, such as this, you would have sequential SMT occurring within the weekly cycle, right? And, you'll catch on. I am pretty sure that's not confusing, but if it is, we'll clear it up. All right, but we have more things to talk about, so we'll move on from this now. Here, right, you can see that we had, and this is something that we talked about, right? Whenever we have the Dow just moving out of place, moving away from the S&P 500, moving away from the NASDAQ, just doing its own thing, right? We draw for, in this case, NVIDIA, but, it would be the stock with the highest market cap, right? Which would be what we would draw for. And, it won't always be NVIDIA, right? Because NVIDIA will not always be the stock, that's doing the best. Let's just say that. It has to, crash sometime, right? And when it crashes, it won't, get up like everything else. Never happens. So here we had sequential SMT, but this sequential SMT is not your typical sequential SMT, right? It occurred between when? It occurred between June and July. So the highs right here, right? And remember we talked about doubling theory, right? Which, we have sequential SMT, on, month-to-month basis, right? So it occurs between months now, right? So here we had doubling theories, sequential SMT, right? The monthly occurring between what? July and June. Here, price failed to break above this high. Here, price broke above this high. Here, price is above this high, which is the high of June. Also, you can see that within, right, this correlation, right, or this correlation is within a larger one, which occurred between the quarters of the year, right? Don't try to understand everything right now, right? So you're gonna, be typing a lot of questions and be like this, but no, you're not gonna get all of it once, right? It occurs over time, of you back testing, of you seeing me use these things to, tell you when I expect something to happen and what I expect to happen at that specific time or, that specific day. Right. So here, this is a, model that you guys can use, right? It's, very effective. And remember, right here, let's just talk about this. As of now, the S&P 500, the high of the week, when? Tuesday. When did we expect it? Okay. The NASDAQ high of the week, Monday. When did we expect the high of the week to form for the index futures market? We expect it first of all, we expect one to form the high on Monday and the next to form the high of the week on what? Tuesday. Here we had sequential SMT, doing that. But what makes this special right here is a 3-stage sequential SMT. When this occurs, you do not need anything else. This is all you need, right? 3-stage sequential SMT. We had sequential SMT on the monthly cycle, which, is between this high and this high, right? Between the monthly cycle, this high and this high. Or, looking at the NASDAQ, it would be here where you see 1, right? That's the first stage. Here would be the second stage, which is the second, failure swing. Here, it's not a failure swing. We had price break above Monday's high on Tuesday. And then here, the final stage, which occurred here for the S&P 500, where we had, the afternoon session of yesterday, breaking above the New York session's high and creating sequential SMT as well. So we had sequential SMT on the monthly cycle. Then we had sequential SMT within the weekly cycle. Then we had sequential SMT within the daily cycle, right? That's like the stars aligning. Okay? That's literally what it is. And remember, that's what we expected. High of the week forming at these times. Right? Right? As someone just mentioned in the chat, 3 drive sequential SMT, not SMT. This is not SMT, this is sequential SMT. Without the sequence, it will not make any sense and it will not work. It's fascinating that these things continue to work. At all-time highs, these things continue to work. When they have no P arrays, these things continue to work. It's what it is. This is what it is, really. And, to be honest, like literally, this is not even the best, I've been saying this for like, a few months now, but it's true. This isn't the best price action. Wait until after election. It'd be insane. Right now, you're crafting your skills. Some of you are making money, right? Some of you are practicing. Some of you are still backtesting. But after, it will be so easy because it will be everywhere. Right? It will be everywhere. The volatility will be so great. Price will be, broken out of, these ranges. It will be totally one-sided. It will be hard for you to lose. Do you need a close? No, not for this. Because, more than likely, two out of the three sequential SMTs will have what? They will have a close. Here, right now we're looking at Bitcoin. You can see that we have, first of all, this is sequential SMT between the general cycle, right? We have Bitcoin making a higher high, Ethereum making a lower high, right? Here, right, we could see, and you'll see why I say that, we could see price, run above this high, run above this high, and then, fall back within the range, right? Here we have, this consolidation. It's, highly unlikely that this retail pattern, which is the, what's it called again, the bull flag or whatever, will, turn out to be positive. And this is something else. It's very unlikely to have two bull flags. There was one here, right? It's very unlikely to have two bull flags, in a row that, gives a positive result, right? So as long as Ethereum stays below this high, we're bearish here. So we could see some type of correlation here, and then, price break below. These lows right here are too perfect. Like, for me, like diagonally liquidity, it's just low resistance liquidity. But, yeah, that's pretty much it for this right now. It's, pretty obvious here. And then here, right here, right, you can see that we did not have sequential SMT here, but we did have this precision swing point. So you don't need the sequential SMT here since we already have one here, which is high probability. But if you had a precision swing point here, then we could expect, price to fall back within the range. This is a precision swing point. This candle right here for Bitcoin is, equivalent to this candle right here, which is, a up close, but this is a down close, which that's a precision swing point, which is why, we saw price drop like this, which is why, while price was here back in 2021, I was so bearish while everyone was bullish, right? It's insane, right? Just this candle right here, which I used to bet my life savings on. It's amazing. So here for Bitcoin, you can see that we have equal highs here. And I was going to talk about this in the previous stream, but I don't know, just missed me. I think I just went over the time or, something. But we have equal highs here. We have liquidity here, right? We could see price, probably drop a little bit, then, take out these highs. But still would not make me, quote unquote, bullish, right? So I hope that you found something, useful from this lecture, right? It's been a while since, I shared something like this. And this model right here is, it's almost perfect, as I would say, because imagine if we had a higher time frame, level above, these highs here, it would be even more high probability, right? Whenever a sequential SMT occurs within a higher time frame, fair value gap, balanced price range, or so on, you don't need more than one. But whenever you don't have, that to work with, then that's when you need more than one. I hope that you found this insightful, and we will be back next time. You already know the time, right? We will, first of all, I will be looking at the economic calendar and, updating you to the next stream, whether it will be Sunday or Monday, depending on the news events, the time we have the news events and when, right? So study these. We already have over 60 hours of video, I believe so. It's definitely over 50, right? And, I don't want to be, straining you, right? I actually promised not to be like, my mentor, ICT, but I ended up, giving too much. So like, yeah, I hope that, you found this insightful. I hope that you study, prepare for the volatility that's coming. Keep sharpening, your skills. And we will talk, whenever we do over this weekend, Sunday or the coming Monday. Have a wonderful